आइए सर। We request our speaker for the day, Shailesh sir, to join us. Friends, good evening and welcome you all to a physical come virtual session after a long time. And who better to have than Advocate Shailesh sir to start the physical journey back after 3 waves of COVID. And today we have Shailesh sir who will be taking us through the critical analysis of recent changes, including budgetary changes in GST, with a clause-by-clause analysis. And if any of your friends are not able to join us today, can you inform them that they can join it via our YouTube channel at ACA Kolkata? Friends, requesting all of you to stand for ICA motto.
Yashasuteshu jagrati Yashasuteshu jagrati Kamam 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 kamusho Pusho nirvimana nirvimana Adeva Shukra Brahma Adeva Vritamuchere Asmin Lokaha Asmin Loshavaha Shataha Sarve Kadumba Yadivitascha Yadivitascha Etat Vaita Etat Vaita Etat Vaita Etat Vaita Etat Vaita.
Thank you, friends. Friends, we all know that GST has been churning itself, and every day in and out, we require threadbare discussion, a slicing and dicing of various amendments which are there. And we have with us none other than Advocate Shailesh Shetty, who has been a look forward person whenever we talk of GST. Friends, first I would request our past president, Arun Agarwalji, who has planned this session, to speak few words about the session. Thereafter, Shivani ji to introduce the speaker. Over to India.
Shailesh sir and all my friends present here, a very good afternoon to all of you. Friends, we are fortunate enough to get Sri Shailesh Shetty here in Kolkata at this moment, just 7 days after the budget, when it was Finance Bill 2022 presented in the Parliament by our Finance Minister. We know normally Finance Bill does not have any new proposals in regard to GST, because GST is now a domain of GST Council. Parliament only has to carry out the proposals or recommendations made by the Council. But sometimes, like this year, as we can see, some amendments have been proposed. Of course, they are based on GST Council recommendations only, but at times this shows that some recommendations may be either not properly made public, or we could not follow the recommendations properly. But when it comes in the form of amendment to the finance bill, we can really see the or understand the implications of these kind of proposals or amendments which are already maybe proposed by the or recommended by the council. So these proposals, some of these proposals are so significant, having such significant ramifications on the GST compliance ecosystem in the country. We really need to understand the nitty-gritties of it, clause by clause, word by word. Not even clause by clause. The flyer says that clause by clause analysis, but actually we are even going to hear a word by word analysis of the amendments proposed. Because maybe in some cases you will find there is only a single word inserted or a single word deleted, having very significant ramifications on the trade and industry. So, and we could probably have, I was just sharing with Vivek, our president also, that we probably cannot have a better person than Salesh, who actually takes the pain, who works overnight, analyzes for us, for the profession, for the professionals, for the benefit of the for the benefit of we professionals to understand the nitty-gritty so that we can actually take care of our clients in our professional life. So from that viewpoint, we have designed this program. In fact, he had some schedule, so I requested him, sir, if you can really make it a program for Calcutta for us, if you can spare 2 hours, one evening with us. So he agreed. He said that okay, I'll stay back there and I'll take the next day. Of course, daily he has been addressing one program or the other. Daily, if you can see for last 7-8 days and next 2-3 days also, daily he has one program or the other to address. Fortunately, today he had to travel to Kolkata for some other program, and we got this opportunity. We grabbed this opportunity and we grabbed Salesh sir for this. So we welcome Salesh sir with the thunderous applause.
Very, very good evening, everyone. At the outset, a very warm welcome to our speaker, Advocate Salesh Seth, the dignitaries on the dais, and all of you who joined us today. In fact, this marks the beginning of a new era for us. Post-COVID, this is, I believe, the first physical meeting. So thank you, Salesh sir, for marking the beginning for us. We look forward to many such sessions. On behalf of Acae, I take the honorary task of introducing our speaker today. Advocate Salesh has over 30 years of experience in consulting, advisory, and litigation practice in the field of indirect tax laws that includes excise, service tax, and GST now. He is one of the partners in a legal firm named RBS Legal, having branches all over the country. Besides this, he is a regular faculty at various professional bodies as well as trade and industry forums. He also addresses a lot of lectures and seminars on the subject of indirect taxes. Besides this, he is also a regular columnist in Vyapar, which is a bi-weekly business newspaper of Janmabhoomi Group. And besides this, I'm also aware that he's a very prolific writer when it comes to poems. So with these very few words, I would request all of you to join me in welcoming him once again.
morning, friends. Dear Arun, Vivek, and friends who are present here. Pleasure is mine to be here, to be very frank. I had to suddenly travel Kolkata, and I cannot come here, nor can I go back without informing the road. And then he told me that if I can stay back, there was no question of my saying no. Acae over the years has become like my extended family. For me, it is always a pleasure to be followed. The first physical seminar is I'm listening to after a couple of years. So I'm very conscious of the opening batsman getting out on a zero in a cricket, in the perils of being an opening batsman. Let me put it that way. Finance Bill 2022. What we will be covering today is amendments which were proposed by Finance Bill 2021, which have been made effective from 1st January 2022, as well as the budgetary proposals of the current Finance Bill 2022. All are in tandem, all are intricately, most of the proposals are intricately connected, related to each other. So therefore, it will be essential that we first understand the proposals which have been already implemented from 1st January 2022. This is a sort of we'll try to go into the deeper instead of taking up, the bird's eye view of the proposals. It will be pure like a technical session because all of you are here. I'm slightly even a little bit nervous also looking at all of you. So we'll get into the interpretational aspects of all this, where it is leading to. It's a serious project. The proposals which have been mooted, the trend was actually set in last year. It was in the air that things are not going to be easy for the taxpayers and tax professionals. That mood was already there last year. Very few people took it very seriously. And this time, the whole intention is very clear. GST is heading in what direction? By compulsion, by design, or sheer by knee-jerk reaction to what is happening in the field. But things are not going to be easy for tax professionals as well. Because it's not the question of we getting worried about what is happening and where the law is going. We have to, at the same time, by compulsion, read the law, understand the law, interpret the law, because the client ultimately will be looking at us to guide. So whether we like it or don't like it, whether we get worried about this or whether our BP shoots up or not while reading what is happening. But we have still to understand and interpret the law and keeping the larger ramifications of these all these amendments which are taking place in mind, and accordingly suitably guide our client in a given situation when he is facing some problem. So love it or hate it, we have to read and understand this. And these are very serious. Very rarely I have come across such a few clauses, hardly 99 clause 99 to 180. Out of these, 3 are notification retrospective amendment, some consequential amendments. So effectively it is 99 to 140. And it may change the whole shape of the GST mechanism. What is the slides of this so their customs have will be sending around they don't also can be circulated anymore. Let me just have a short look at economic survey. If finance bill from the GST perspective is serious, economic survey was all optimism, all optimism. Rarely would one come across such an optimistic survey. It is as if there is a rainbow in the sky. There are no clouds or dark clouds, and why are you crying? So it is like that. Nothing, there was no COVID, or if ever there was, we have come out of that. No inflation pressure is expected to be there. Economy is on a roaring growth path. Everything. I mean, very optimistic survey. On GST, Para 2.12 and Para 2.13, some 4 or 5 things economic survey mentions. Whole rosy picture that GST has been consistently showing the total tax revenue of more after July 2021. There's something to say about this 1.41 lakh crore, but I'll connect it later. Then, the overall indirect tax revenue collection contribution to the total gross tax revenue collection has been hovering around 29%. It appears out of this 29%, 15% is on account of petroleum products and tobacco products. So effectively, but yes, share of indirect taxation to the total tax revenue is increasing year after year, and that is the trend you can expect in the coming years. World over, internationally, governments are relying more and more on indirect taxes for their revenue needs and for furtherance of their various policies and public development policies. This is the trend. Their dependence on direct taxes is slow. This is something to keep it in mind. That in coming years, the role of indirect taxes is bound to be more and more dominant in the management and in the running of the economy from the government's perspective. Then there is a mention about the COVID measures which have been taken and how actually from GST perspective, COVID relief measures which were taken. And also the last part, the improvement in GST collections has been due to the combined effect of the rapid economic recovery post-pandemic, the nationwide drive against GST evaders and fake bills, along with many systematic change introduced recently and various rate rationalization measures undertaken by the GST Council to correct inverted duty structure. Now, I'm a bit baffled at this very bold claim. In 4 sentences, one, again a debatable issue. GST, the nationwide drive against GST evaders also is going on, no doubt about it. And fake bills along with many systemic changes introduced recently. But is the increase in collection due to this drive against the GST evaders? How far? Recently in RTI, they said that out of 93,000 crore, how much they have really recovered? How can this bold claim be made that improved GST collections is on account of the, catching the fraudsters and then recovering the money from them? And whatever is recovered during the investigation, can it be treated as a revenue? Is it lying in the form of deposit with the government have been issued. If the person who has been caught, if at all he has been caught, so if he has been caught, he has been made to shell out some money. And during the recovery which is done during the investigation, if he does not close the case, whether under section 73(9) or section 74(9), by opting for the closure with or without penalty, then it means he is expecting the so-called notice to be issued to him. So he is going to fight that case, whatever may be the justification for him fighting the case. Till that time, whatever money is required during investigation, will it not be regarded as illegal? And how can one say there has been an improved revenue collection? I mean, it sounds bizarre to make such claims, to be very frank. And finally, in steps undertaken by GST Council inverted duty structure, what was textile? And we made so which inverted duty structure has been really correct? The correction would have come at all. To some extent, whatever has been tinkered with would have come in last 2-3 months. Would it have such a huge impact on the revenue collection? So from where this 1,41,000 crore or more than 1 lakh crore and improved revenue collection, the collection is on account of this. And but they have made, because very few people read this. We are not supposed to read all this. This is a waste of time. So, we have, someone like say this, unnecessarily on other source. But seriously, this is something to wonder about. Because 1,41,000 crore, I have not many things to say on this 1 lakh crore. And first of all, this trend of declaring the figure month after month of revenue collection, why should there be? Why are we declaring? We have never been declaring the collections in custom, excise and service tax on a month-to-month basis. Never it has been the trend. What is so wrong? What is so extraordinary about GST? What we want to convey by declaring and professional and sorry, be professional for that entire day, social media will be about this news. Like 41,000, 30,000 crore, this 100 people same message. Everybody. Into my in March. And we are capable of analyzing that. Something to be worried about. Is there any? As far as the text technology I belong to Stone Age.
So better slide.
Go to slide.
67 66 11.
64. Let us begin our technical aspects of what is this. The Finance Act 2021 made certain amendments which have later on been. Another thing is, please remember this is very important. When the bill is introduced, all the clauses of the bills are to be and that they are also being described as section, which is not correct. Section always. And this I am witnessing from the government side rather than professional side. So there's a difference because till the time bill is enacted, the clause remains clause of the bill, then it becomes a section, subject to whatever amendments in between. So this is section 108 to 122 because there have been a lot of amendments in the Finance Bill 2021. The original clause number got changed. So it has now become section 108 to 122. By which the GST Act provisions have been amended, and section 123 IGST Act, section 16 exports, where you have to compulsorily make the exports under bond unless there is a class of persons or the goods or services which have been notified by the government. Section is still not implemented, fortunately. The detailed article on the date of effect, because there have been a lot of confusion about the date of effect of the various provisions of the Act. When the finance bill is introduced, the proposals of the finance bill can take effect on a different dates. These dates are one, it becomes enacted as an act. One date. Second, it can be from immediately from the night of the bill. For that, you have to look into the last the provisions close so and so of this bill have been more directed. So that is second. Third, any specific date mentioned in the clause itself, then after enactment of the bill, that clause will take effect from that particular date. Then fourth will be from the date to be notified. If there is a specific date mentioned in the section, that is one, and the date to be notified by the central government after the enactment of the bill. So as it happens under GST every year, this year budget also, not a single proposal, major proposal. There is only one exception in this year budget. Otherwise, all proposals will be taking effect from the date to be notified by the central government before the Lok Sabha and before when they become enacted part of the statute, they will still not be effective. They will become effective from the date to be notified by the central after the enactment of the bill. And here recommendation of the council is not required. The effect of various provisions of the bill or act, you will never find on the recommendation of the council. Because this is the placed in the parliament by the finance minister for Union of India. Correct? So GST council has no role to play. GST council role remains restricted to whatever recommendation they might have made. But for giving effect to the proposals of the bill after it is enacted is simply a delegated authority. Central government will do it in terms of section 1, subsection 2, clause B of the finance act, finance bill or finance. It's a standard. This way, this act extend to all of India to unless there is anything to the contrary, the clause so and so will take effect on this date, this clause will take effect on this date. So this is one important thing. I am not expecting the proposals of the current year to be made effective before December 2022. Approximately. Because 5 states are going for the elections. Governments will be formed. Legislative assemblies will be constituted. Those 5 states and all other states and union territories will then adopt the same amendments in their respective state GST laws, and thereafter it will be notified. So this will not be, current year proposals will not be effective immediately. Just as Finance in 2021 proposals have been made effective from 1st January 2022.
So with all the clauses 99 to 113, even in the finance bill 2022, they have become date to be notified, right, sir? Date to be notified. So my question is, in the parliament only the date will be notified, or it will place in the for the GST?
No. In the clause you will never find date to be notified.
No, in the main.
No, in the main section 1(2)(b).
Yes.
If you see finance bill section, there's a standard every.
Right, sir.
So in that finance bill you will find clauses 99(2).
Right.
Whatever clause they have mentioned, clause B.
Yes.
Shall be effective from the date to be notified by the central government in the official gazette. Simple. So therefore, central government will issue notification. Academically, I am only wondering that if GST related amendment, if the notification is issued by the central government, which are 16 by 2021, 29, why it should be called the central tax notification? Because this notification is issued in terms of the authority under section 1(2)(b), merely because they are related to GST related amendments. Can it be called the GST notifications? I have some reservations on this, but anyway, it's a matter of academic. It's an academic interest, but it doesn't mean anything. Now, section 112. Now, which amendments have been made effective? Section 50 has been made effective from 1st June 2021 about the interest. That interest will be charged only on the case portion of the delayed payment of tax if it is paid to ITC, non-tax. Right? Then 110, section 35, the most heart-burning amendment, 35(5) omitted and 44(1) substituted. 35(5) audit of the taxable person and 44(1) annual review. Right? The amendments which resulted into a lot of you and try to be already, my views are very clear on this, so I would not go into that. I'm only looking forward to the date, and you can even decide not to call Silas by ever again, but I'm looking forward to do that. 9 and 9C will be wiped out from the, completely omitted from the. It will be very good for a boost to all of your career for the younger generation.
Any specific reason for that?
There are many. I can go for nearly 2 hours.
Just one, what would be?
You can't. Compliance-based practice are over.
Yes.
They will go on for some time. The type of complications which are getting inserted, which are getting created for number of reasons, compliance will become an extremely difficult job. 2, a professional cannot get mired into forms and figures for years and years and years. You don't talk you don't even talk like most of the professionals, like SOCO's notice, provisions, or summary of the notice, nothing. DRC 01, DRC 1A, DRC 07, DRC 03. We talk only ASMT 10. Have we read section 62 before talking about ASMT 10? And what are the implications of section 62? What happens when ASMT 10 is issued with 12 parameters? If 12 parameters, one is ticked and others are not ticked, what is the significance? And we talk about ASMT 10. We must come out of the forms and figures. It is this place. An important thing is there is no audit under GST. Right? There was never an audit. There is no audit. As of now, right? Only the title really gave a leeway to everybody to call it an audit. Get his accounts audited by a chartered accountant or a cost accountant. Section 35(5). This is how it had started. Right? Now omitted. And then file the auditor annual account, filing in ID. and under corporate loss. Right? Is there a separate audited annual accounts from the GST perspective? We are preparing a corporate law company. Only that, then what's the meaning of the word cost accountant in section 35.5? Have we ever thought of it? He felt that cost accountant has been a competitor. But what if they had envisaged that there will be an audit, specific GST perspective audit, which can, it was never implemented, never got. Where is the audit format? Where is the audit guideline? You have elaborate tax audit guidelines, accounting standards, everything you have to meet with, right? So where was the audit? But if I tell my client that I am doing your reconciliation, client may not pay me 25,000. But if I tell him that I am doing your audit, he would be willing to pay me 1 lakh rupees. That's the only difference. And in the name of reconciliation also, how many of you have been seriously doing audit? Very few. Beneath the transaction, behind the transaction, over the transaction, inside the transaction. Have been doing it. And other malpractices, so I don't want to get into that. There are exceptions. But then those are so few exceptions that they prove the rule. In the name of audit, lot of things are happening, have been happening, they should not happen. I would rather prefer, which I talked in last month in Surat chapter, my talk, that what you have been doing, what proposed to do, by doing the 9 and 9C exercise, why don't you do it all around the year of it? Indirect tax is a transaction-based tax. It is not a block year tax base. Then throughout the year, the client goes on entering into the transactions, and then whatever he wants to do, and then at the end of the year, his chartered accountant gets into picture and tries to set right everything, whatever mess he has created. अब तो possible नहीं है. Better of it. Every single transaction creates the rights in favor of and liabilities against the taxpayer. And when there is a transaction based thing to do is to monitor the transaction. If he is making audit, whatever you want to, LJ, review, round the year audit, whatever description you want to give, it will be a worthwhile service because GST amendments is not a budget day amendment. GST round the year 365 days amendment law. You have to really do the hand holding continuously. And there is a value which is much more high than that. Rather than this last year, 96. Indirect tax, I've been saying this for years and years when I got services. Indirect tax is provided you are rated of efforts. Your respect, recognition, and remuneration will follow automatically. So there are lot many things. Next article is please create if you come 20 to be notified. These are CGST amendments which have already been made effective. And what I these are certain other authentication related amendments which have been made effective. Amendment 45 to issue of notice under detention amendments have been carried out. Now, the first major amendment made effective from 1st January, that is section 7. Societies and supply definition of the tax rate. Housing societies, residential welfare association, chambers, members club, etc. If I now say only society, all these entities where the doctrine of your principle of charity was made effective. The aid is retrospectively. The activities or transactions. Section 7 is a inclusive definition of, and in that 7.1 AA, supply includes, this is how the entire clause will read. Supply includes activities or transactions by a person other than any staff for case deferred payment or other valuable consideration. Explanation says, for the purpose of this clause, it is hereby clarified that notwithstanding anything contained in any other law for the time being in force or any judgment, decree, or constitute shall be deemed to be two separate persons, and the supply of activities or transaction interest shall be deemed to take place from one such person to another person. This is the explanation which has been inserted given retrospectively. Simultaneously, paragraph 7 in schedule 2, paragraph 7 shall be omitted and shall be deemed to have been omitted. Then paragraph 7 was pertaining to supply of goods by an unincorporated body to its members. So that was it. So that is being omitted. Now, intention is large and clear. Intention was to nullify the dispute regarding the applicability of doctrine of mutuality to the societies had been there for more than 3 decades, maybe more than that, in weight and services. It has been there. And finally, it reached Supreme Court in Calcutta. In October 2019, Supreme Court delivered saying that this doctrine of mutuality applies even under weight or services. But who think any of you know that incorporated body. Ultimately, they applied, they held that the principle is applicable. In the negative lay section 65B 44, a deeming fiction, the 2 persons shall be members and the entity should be So that was the second attempt. All this came for scrutiny under this judgment and fine. That was the issue. I have been always taking the view very consistently. Okay, and there are quite a few. We and also discussed we have been taking a very consistent that in GST otherwise there was no need for that from 1st July 2017 till 31st December 2021, such entities were outside the purview of GST. And if the retrospective amendment is held to be invalid because of retrospectivity, even if it is held to be valid for future, right? Then based on this very amendment, the collection of the tax would become the actually without authority of law in breach of Article 265. The refund of which will be available to the parties, subject to unjust. So we have to see that what happens. But anyway, we are professionals. We deal with the law. One of the most complex pieces of legislation we are dealing with it. We have to read, interpret in our manner. There are all these young people who are sitting here. Please read the variant. On the WhatsApp will never allow you to understand and interpret the law correctly. The variant. You have no right to be a tax officer. You have to read the variant, not the board clarifications. Never advance authority. And never the free distribution of the Gyan on the WhatsApp. Never. You have to read. Otherwise, you will never be able to grasp this law. As a professor, not for GST, this is good for anything, in whatever field you want to make your career. For board's sake, we are dealing with the law. I have to read the law first and understand. So, if about the non-applicability or applicability of GST, the document of Budgetary on under in the GST, so they were worried. So in 39th meeting, they took a note of this Kolkata class judgment and candidly confessed in the minutes that yes, it can create some roadblocks in the smooth collection of GST from such entities. Council took the note of this, and this one sentence is enough. I'm giving you only the tone of the sentence, and they suggested this amendment. And the two amendments, section 7, clause insertion of clause AA, and omission of para 7 of schedule 2 is the result of this amendment. What is important is the draft amendment suggested by and approved by the council and the amendment which has come exactly under the way. Both are different. And here one question arises, which is to be interesting to look into, right? But it is a GST council versus parliament. If the draft which is approved by council, is it binding on the parliament? Does the parliament actually loses its prerogative, its pivotal position, just because GST council is elected as a constituted authority? Creature of the constitution. So it is like also a constitution. If particular amendment proposed in any finance bill is not coming out of council's recommendation, can it be said that it could not have been included in the finance bill? Something to ponder over. It's a very independent subject, so I'm not going into. But I'm just giving you some food. The other aspect is now amendment. The language does not match and very poorly up. After 1st January 2022, everybody will be required to pay the tax. And those who have not paid the tax, though otherwise liable to pay the tax, will be required to pay the tax for the past period also. So one. Now, the question here is it really so? The validity, in my opinion, validity of these amendments also can be challenged easily on two counts. One, retrospective, the justification for retrospective validity, and two, that it still does not, based on that amendment, it cannot be said that such entities have come under the tax. Section 7.1 says, supply includes so and so, all activities which have been defined, carried on by one person for another person for a consideration in the course or furtherance of business. So the twin conditions to become a supplier, to be a taxable supplier consideration. For a moment, the requirement of the existence of two distinct persons has been taken care of with this amendment. What about business and consideration? Section 2, subsection 17 says, business includes facilities or advantages granted for a contribution in whatever by unincorporated body to its members. That's a business definition. But supply definition does not deem it to be the supply. That does not deem it to be a supply. Deeming fiction is introduced only under section 7. And even that explanation by which this deeming fiction has been inserted, I mean, there is enough ground to challenge that, the way it has been worded. It is inside out, upside down, and with no middle. So basically, it is, so one is business, and second is business with its own connotation. Can it be said that the supply, whatever, is there a supply first of all from an entity to its members? Are we first presuming the doctrine of mutuality is not applicable at all and then treating it as a supply? Because without it, I cannot treat it as a supply from one distinct person to another person. So am I not scoring the sales goal by saying that this should be treated as a distinct person and business definition includes the facilities or advantages for a contribution? And second is consideration. A consideration always flows from one person to another person. So in the overall, they have taken care of, maybe assuming for a moment section 7.1, they have taken care of the clause, schedule 2. They have still not been able to take care of business and consideration. From this perspective, one has to critically examine this, whether these amendments still bring such entities within the GST levy or not. Retrospective amendment. There can be many arguments against retrospective amendment. There is no justification for that. Totally. Because this was not something which had been introduced in the form of law for the first time, which was poorly worded, or it was missed out. The battle of doctrine of mutuality's applicability has been going on in VAT and service tax for more than 3 decades. When GST came, at least at that time, legislature should have actually understood that this could be an issue. Particularly when in the GST regime also, the problem had arisen. If not before the High Court or anywhere, at least before advance authority. So, is it that the government was actually looking forward to, maybe in Supreme Court they will win, then everything will fall in place? And now when you have lost it, you are going for the retrospective amendment. You done this long way. When you knew, Kolkata Club judgment did not actually guide you or teach you that your law is actually, there are lapses in the law. The law is poorly worded. Law is not taking care of this. Kolkata Club is on the principle. We are talking about the provisions of law. So So you could have, it was not that the provision already existed, but they were not properly worded. In the light of Kolkata. So I will wait. If I lose, then I will. And that's why it's one of the, from one perspective, I'm looking at this. The other part is those who have not paid the tax, assuming the validity of this entire levy amendment, and the others are actually, the forced, the societies are forced to make the payment from 1st of July. Valuation related dispute will remain. Because contribution to repair and maintenance fund, charges which are paying to various other government authorities or municipalities, can the agency principle be made applicable? Can it be said it's a pure reimbursement? Can it form part of the value? In Mumbai transfer price, 25,000, more than 25,000, you cannot take as per the society's registration when the one member is selling the flat to somebody else. If that is so, but they normally take, because that is the main income of society. So if they take any additional amount, right, which they cannot take as a transfer fees, it is always taken as a donation. Your contribution to the society. So if taken as a donation, can it be subjected to the tax? If it is purely taken as a donation, without really saying that only that pays, if you give me donation and then only I will, that's no quid pro quo. No one would write because it will be illegal. So they would never write that I am taking this donation so that I will transfer your flat. Can it be subject to ignore the authority. Okay. And the Greenwood Society and about the income of the past year. Even if the tax is recoverable or recovered the past year, India can't be recovered. By the same money, there are numbers of people. They can't be. And then whether ITC will be available to the society is another interesting question. And this is the larger question which can arise in the coming days for many taxpayers. Demand is made for the past period against the society. Society says, okay, fine, I'm willing to pay the tax, but you give me the ITC. These are my inward supplies which are tax paid. Then can it be denied? On what ground can it be denied? I'm talking about time limit next. Limitation period is next. I'm talking about principle if the demand for the past fee should be given or not.
Yes.
But the society was never registered. How can it be given? Section 16(1) says every registered person shall be entitled to take the input tax credit on the inward supply of the goods or services used or intended to be your registered. This is the context of Sandwich credit. You will find umpteen number of judgments that when the demand is raised for the past period, whether for any reason, and whether the tax or excise duty has not been paid by the party, whether by under bona fide belief or by design and even he has evaded the duty or tax, then also the benefit of Sandwich credit has to be given. This is the central principle of law. Right from Formica Division, Supreme Court. And hardly a month or week goes when such judgment does not come. Even for evasion also, benefit of exemption cannot be denied subject to conditions. And therefore, majority of the demand, at least excise people would always raise by giving that 8/2003 central excise small scale exemption benefit. And then only they will raise the demand for the amount. Right? So, Sandwich credit benefit is to be given. But again, here lies the cage. Rule 3, which is the fountainhead of the standard credit rules 2004, says every manufacturer, a manufacturer or provider of the output service will be entitled to take the credit in what are type of taxes are paid. Manufacturer or output service provider, not the registered person. In my opinion, even ITC in such cases also should be made available, is available. It cannot be denied on the ground that the society was not registered. Society was not registered precisely for the reason because the levy did not exist. Now, when you are demanding, this entire proposition can be viewed in the light of principle of neutrality. One of the most important and outstanding feature of the GST or VAT is the characteristic of neutrality. GST is considered to be the neutral. The principle of neutrality, and in the coming days, this principle will come to play very major role. So, but this will have to be, this is going to be a litmus test as and when. And such issue is going to arise for other taxpayers. We have been always taking the view that section 16 for time limit does not apply even in the normal cases. So the 17-18 time limit, 17-18 credit can also be availed now. System will not allow because portal is almighty code, right? Above everybody. So the portal will not allow. But manually you can put your. After the retrospective amendment of section 59, rule 59, rule 61, and the tweaking of the various returns to be filed with the retrospective amendment, the fight has become a little bit tougher. I would tell you. But before that, so we were very clear. 16 for time limit does not apply. Even if there is a belated payment of tax, interest liability under section 51 also does not apply. So it's a very intricate, complex interpretation of various provisions. But yes, 16 for time limit can also be, because here when there is a reopening of the assessment, what am I doing? This is not a simple case of a registered taxable person forgetting to take the ITC, and 16 for time limit is being brought into picture. This is a case of demanding the tax for the past period, and in the context of that, I am asking for the benefit which otherwise would have been available to me. In Formica, Supreme Court state that if any demand is raised for the past period, the board benefit otherwise would have been available to the party should be granted to him, whether exemption or otherwise. It is this principle. Therefore, at least in such cases, definitely 16 for time limit cannot come into play. You can loosely call. I am very, very conscious of using the word reopening of the assessment. Because there is no assessment. But you are taking the levy for the first time. Therefore, 16 for time limit is not applicable. And rest is okay. Coming to amendment to section 16. Here the fun starts. If all of you have thought the real drama has not started, the real drama will start now. So you have not seen anything. If you cover the whole amount of ITC available, so credit 16 and 17, obviously, two major comprehensive rules. To some extent, 18 for the basic foundation. 16.1 says you are entitled for the credit subject to conditions and restrictions. 16.2 says 4 conditions. Now, here I will take the whole amendment concerning the availment of the ITC and recovery of ITC in the context of the one topic. What usually inserted? There are 4 conditions prior to 31st December 2020. Recipients should have received the tax invoice. he should have received the supply of the goods or services or the both depicted in the tax invoice. Supplier should have paid the tax in case or out of the admissible ITC, and fourth, the recipient should have filed the return. The last clause uses the word he. He should have filed the return. He belongs to recipient. He pertains to recipient and not the supplier. Many people are making this mistake. Here, he in the clause D is recipient buyer and not the supplier. Now, these four conditions. The fifth condition which has been introduced through this budget made effective from January 22 is the details of the debit note or invoices on the basis of which the ITC is being proposed to be availed has been furnished by the supplier in the return to be, that is GSTR 1, and such details have been communicated to the recipient under section 37. This is the amendment under clause AA, which has been made effective. So fifth condition has been inserted. Supplier should have filed the GSTR 1 and such details should have been communicated to him under section 37. Now section 37, if you read with rule 60, 59 and 60, it is 2A. 37 is 2A. Keep it in mind. Now, sub-rule 4, which was introduced on 9th October 2019 by notification 49 by 2019, that sub-rule 4, which provided for the restrictive credit in case of unreconciled invoice. You can take 20% of the credit, total credit of the reconciled invoice, or 10% and then 5%. That has been now substituted by this new rule. No input tax credit shall be availed by a registered person in respect of invoice or debit notes which are required to be furnished under section 37(1), that is GSTR 1, unless the details of such invoices are furnished by the supplier in GSTR 1 and the details of such invoices or debit notes have been communicated in form GSTR 2B under Rule 67. Sub Rule 7 of Rule 60. Now, so the multiple questions arises in the context of this. First of all, is now insertion of the rule. The whole issue is arisen earlier is ITC as per 3B vis-a-vis 2A. That is one. What is 2A? 2A was always the part of the enactment of the rules right from 1st July 2017. Only we were mercifully oblivious of that fact. Nobody bothered about 2A till 9th October 2019. Everybody started looking at 2A only after 36(4) sub-rule 4 was inserted. Who bothered about 2A? Nobody till that day. And thereafter we started looking at it. 2A is an auto-populated statement whereby the details of the invoices or debit notes uploaded by the supplier in the GSTR 1 will be visible to the recipient buyer. So he can check. It is only auto-populated. Recipient buyer has no role to play. Even supplier also has no role to play in 2A. His responsibility ends once he files the GSTR 1. Then system will pick up the details and auto-populate it in 2A. The short question arises here is, if there is a mismatch between 2A or 3B, can the ITC be denied? Merely on that ground. The answer is capital NO. It cannot be done. If there is a mismatch, same principle applies for 2B versus 3B. Right? If the 2A shows the credit with my 3B on the basis of which I have taken the credit, it means that there is a difference. 2A is a dynamic return. Those transactions, first of all, I have to identify those transactions that the difference is on account of these suppliers' invoices, which are not getting reflected in 2A. When ASMT 10 is issued to you, saying that there is a difference between 2A and 3B on this end, 1920 or 1819, the first thing for you to ask the officer is to provide you the details of the transactions where the difference arises. You are not supposed to look into it. Don't assume the case of the department, which we have been traditionally doing. Don't get into finding out which invoice is the difference. Don't do his job. Legally, he is supposed to tell you what these differences consist of and to which transactions is applied. Because when he has seen this system, whatever difference is there, when after 1 month when you are seeing the system, you might find another figure also. That means the dynamic difference. But in any case, he is supposed to be. Okay, that is first step.
So just one question. Practically, do they give?
It's not your job to tell. Your job to is to ask for. If he doesn't give, just simply repeat, remind him. Not only in this, GST legally you should know what burden has been cast upon me and what burden has been cast upon the department. There are principles right now. A person cannot be asked to prove the contrary. And taxpayer is not expected to assume the case of the department. I am standing here before you. I can only prove that I am sightless. I cannot prove that I am not sightless. I cannot be asked to prove the contrary. And this is one mistake everybody is making. Everybody, majority of the people I am seeing across, they are making it. We become too compliant and too submissive. Shift the ball into their court and ask for the reasons and go on repeating that. You are not supposed to.
So, suppose we have given the, as advised by you, we have given a letter to department to provide the party-wise detail for different differences. Department has written in the reply, please provide a reconciliation statement party-wise to the RTP. In this case, where we stand?
No, but what is both of them has got to do with that? Both it has got to do with that. What 2A versus 3P has got to do with this?
No, sir, we have given the letter as advised by you. Please provide the details party-wise where difference exists, right?
Right.
And we have given the reminder. Then department has written this 3B, this 2A. Please provide us party-wise reconciliation statements why the difference is.
Well, it means that whenever what differences you have worked out and on the basis of which you are asking me to revert the ITC was without any basis. Because if these details which he is now requiring from you
Yes. Yes.
were considered to be essential for him to actually work out the difference and demand the money. So he has prematurely acted without any basis, only in the basis of. And what is meant by party-wise ledger? What is a reconciliation with what?
2A versus books of accounts.
So that is what exactly I am saying. Okay, you have worked out the difference in the first place. You should have some basis, right? You should have. I mean, you may say department.
Yes.
Department, when they are saying that 1 crore difference is visible during 18-19 between your 2A and 3B, you are saying, okay, 1 crore is fine, but you give me the transaction. One way. They are not providing it.
They are writing to us.
No, you say that. You say that where is the since the 1 crore difference has already been worked out by the department, it means the department has gone into this aspect because without that they cannot. Invoices are visible to him also. GST are one. So you were actually shooting in the dark. So you haven't put in the. I mean, you have to establish that earlier you were shooting in the dark and leave it at.
So we have given. And
then next stage what will come, whether they oblige you or not. What happens in a given case where ultimately it is found? Let us assume the worst case scenario, negative scenario, where the particular supplier's invoices are really not visible in 2A. And details are now available with you. Okay, for in whatever manner. What will, as a taxpayer, you are supposed to do? You will take hold of that person by what is wrong. This problem can arise mainly before 17, 18, and 18, 19.
Yes.
Major. Because after 19, though, you would have been careful. But before 19, this problem would have arisen. You are only taking the credit on the basis of the whatever is available as per your books of accounts. Right? You have never seen the 2A. Now you are seeing the 2A. If you find that even after all these years that supplier invoice is not visible, you will take hold of him and you will ask for his explanation. He will have something to say about it, what has happened and what has not happened. There can be only two types of transactions in this type of cases. One, the recipient buyer knows the entire transaction was adjustment from the beginning, or entire transaction was genuine, irrespective of the supplier's fault. There cannot be two way. Third way, right? If it is adjustment, your client will save the trouble for you. He will say, Tarun ji, जाने दीजिए ना, मैं reverse कर देता हूँ. Because he knows what he has done. As a professional, you will never be able to make out whether the transaction is genuine or not. You may have some doubts. तो आपको समझ जाना है कि उसने क्या adjustment किया है. then it is his bill. If it is a genuine transaction, where supplies have been received, consideration has been paid, everything is genuine, only because of some reason supplier has not paid the tax, maybe by design, or supplier has not paid the tax by because of some other reason. As per section 16(2)(c) will come into play. Ultimately, because the logical fallout of non-reflection of the invoice of the supplier in 2A is that the supplier has not paid the tax. So 16(2)(c) will come into play. When 16(2)(c) come into play, it becomes a case of availment of the wrong credit by the buyer. The recovery of wrong availment of credit, wrongly availed credit, cannot be made without section 73. So-called notice. That's what I am trying to tell you. Ultimately, it has to lead to the section 73 or something for defense. 73 only. And it is your right to ask for the so-called. Mere 2A versus 3B and later. So another cobweb in our mind, which is that every letter coming from the department is a notice. That should be removed. Summons is not a notice. Letter demanding the tax is not a notice. Anything asking you for doing anything is audit objection is not a notice. Investigating authority asking you to make the payment during investigation is not a notice. Client may call you and tell you, sir, jara aa jaiye jaldi ek department se notice aaya. And what you will find is will be a letter. But we are also falling into the same, thinking process. Department से कुछ भी आया तो notice आता. And we forget that there is a notice for 73. Section 73 भी exist कर रहा है.
Sir, 73 में notice issue कर दिया है.
So then you fight.
Then we will.
Then it's a normal fight. Whether 2A can be the basis.
वो जैसे भी normal चल रहा है उसका तो ongoing.
Exactly. You have to take it to that level.
बस.
Whether for the supplier's fault, can I be? And let them prove the supplier has not paid.
Another, sir, it is, you said this provision, as we all know, 9 October 2019 is applicable, right, sir? What?
No, not 2A is applicable.
We
We became aware of the existence of 2A.
Yes. So, legally transactions before 9 October
That will not
2019.
be. That will not. Because 36(4) only restricted the credit. It did not talk about 2A or otherwise. You can come to know about where I have to apply the 2A 36(4). Only by finding out which invoices are not getting reflected in the system. How can I find it out there? Only by referring to 2A. So 2A is only an enabling auto-populated statement to allow you to see if something is wrong, everything is declared by your supplier. But it has nothing to do with the retrospective amendment. Another aspect of this is whether 36(4), I am very clear, I have been saying time and again, 36(4) was, when it was introduced, it was an illegitimate child with no parent or an orphan child. So its validity is absolutely given. Now, after substitution of sub-rule 4, read with clause A, introduced from one that child have been made, that company, they have been. It was a child equivalence of income. So 36(4) validity was always, none of my clients have ever followed 36(4). I was very clear, either you follow 36(4), want to follow, then don't take the credit, or you take full credit. Don't be compliant taxpayer. I will take only 5%, I will take only 10%. Either take full credit or don't take. If in a month I have 5 suppliers with about 10 invoices between them, not reflected in the system, as a good taxpayer, I take only 5% credit of the reconciled credit. Next month, for over a period of time, out of those 5 suppliers, 2 suppliers, whoever actually have 7 invoices between them, upload 3 invoices, then how much credit in that particular month am I supposed to take? If you can explain to me, I will see it personally. I have no answer to this. What effect will you give when you have originally taken 5%? and there is a piecemeal loading of the invoices. So fine, but 36.4 was never available. Now we come to the section. So no ITC detail in terms of section 37 is fine. If you see, details are communicated to the recipient, which can only be via 2A. But substituted section 38, basically GSTR 2B is in the context of section 38 and not 37 at all. 2A is 37.
Right.
So there is again a mismatch between the two provisions. The next is RB shall be entitled to IN. So now we have now one more conditions. And 16.2 starts with shall be entitled to take the credit. New 36.4 shall avail the credit. I don't see much difference between the two. My availment depends upon my entitlement. So ultimately, it's a coincidence. They coincide with each other at the one point of time. If I'm entitled, I can avail it. I would not get into that splitting interpretation. 16.2AA and section 262C. So the point here is, the first point is, even after you have complied with all the conditions, don't take it as an unfettered right of availment of the ITC. There is much more to take care of. Then, if there is a mistake from the supplier side, or there is a mistake in auto-populating by our portal, then what? And because of that, if the supplier has made a mistake in mentioning the GSTR registration number of the supplier, it happens. There can be any number. All of you are at the grassroots level working. You should know better that in GSTR 1 filing, supplier can make so many mistakes. For what reason? Start tabulating all these mistakes. Under what circumstances they can make, what type of mistake they can make. This is important. Which mistake they can make. And because of that, if the system does not upload, does not auto-populate it, can I be denied the credit? These are all the issues which are going to arise in the 75. Subsection 12 has been inserted in section 75. And that subsection says, for the purposes of this subsection, the expression self-assessed tax shall include the tax payable in respect of the details of outward supply furnished under section 37, but not included in the return furnished under section 13. So in GSTR 1, I am declaring my outward tax liability, but in 39(3)(b, I do not declare it. It is not declared. Section 75 talks about the recovery against the taxable person of the self-assessed tax, for which section 79 action can be taken. Garnishing and other attachment related action can be taken in terms of. Now there was a dispute whether self-assessed tax, whether it requires issue of the so-called notice or not. This explanation seems to take care of. Madhya Pradesh High Court in Kabir Realty case, it is not required. Self-assessed tax can be recovered directly. Taking cue from this judgment, this explanation has been inserted. Okay, what is meant by self-assessed tax? Whatever I declared in GSTR 1 is a self-assessed tax. Its recovery can be made if unpaid with interest. It can be recovered by resorting to section 79. There is a Bombay High Court judgment which says that so-called notice is required to be issued even for the recovery of self-assessed tax. But they seem to have gone under cover. Now, before I proceed with 7512, now before I come back to section 16, now let me complete this first. So amendment says that the recovery of the self-assessed tax, 2-3 questions in the context of this is that whether recovery proceedings can be initiated for recovery of self-assessed tax as per GSTR 1 when filing of GSTR 3B is delayed. It says if you are declaring something in 1 but not declared under 3B, then it can be. Under such circumstances, suppose the 3B is delayed, then can this action be resorted to? That is, it can't be. But again, these are all, because all portal driven, everything is online. So you have a very, very less leeway in getting, then you have to start putting everything into manual to the jurisdictional authorities, which can't be done on the portal. Your objections, your submissions, everything. This is very important. Second, section 75 deal read with section 79 and non-filing 80. Whether facility of installment can be given, self-assessed tax liability. I'm accepting the liability. For some reason, I did not pay the tax. Can I be given the installment facility under Section 8I? If you read Section 8I very carefully, it says it excludes self-assessed tax. So no installment facility for self-assessed tax. However, in this recent judgment in Jude statement in the Meghalaya High Court, this was a case where self-assessed tax liability as per the record was coming to about 43 crore, which party has not seriously disputed going by the facts narrated in the order. Only they were seeking some adjustments of the tax liability. And finally, it appears that with the consent of both the parties, High Court was requested to intervene and pass a suitable order. We are granting the facility, working out the structure for the payment in installment. And High Court has actually given the installment facility under this of the self-assessed tax liability. Now, from the revenue side, Section 80 was never brought into picture. We can only say under extraordinary jurisdiction, Article 226. This is the solitary case I could come across, where installment facility has been given of the self-assessed tax liability. Very interesting thing. They have charted out the complete map. What will happen if first installment is not paid? Then what will happen? There was an attachment also. When the attachment will get lifted, bank attachment. Very interesting thing. Then comes, otherwise, bear it in mind, Section 80 as a provision of law debars self-assessed tax liability from the installment benefit. Recovery under Section 8, it is of unpaid interest. Whether it says not only self-assessment tax, assessed tax, but only also interest and unpaid interest, which is remained on account of the tax having not been paid, it is permissible. But what if I am disputing the very interest liability computation? Can I not dispute it? In my opinion, yes, it can be disputed. Now, for the past period, when the liability is discharged, I understand that few days back the FSA utility has been actually made activity, right?
Yes.
Okay, whereby they give you the liability for the past period, you can mention it separately. And because you are so much stress load, so they are also working out the interest for you. Right? Now working out that interest, does that mean I have to pay it immediately? What if I am challenging the interest? Section 75(12) and 79 does not help you. Again, you have to fight. Way of disputing the interest. Can the penalty be reviewed to the government by any person? Any amount is wide enough to cover penalty. So for my penalty recovery, in any case, Section 79 will lie separately. Now we come to the, and this is the before initiating Section 79 actions for the recovery of the self-assessed. Point here is that if the tax person one lesson, one thing. So take it with the pinch of salt and move in the right. So the point here is when the explanation is not, if you find taxpayer exemption is justified, but he has rejected it without giving any valid reason or otherwise simply arbitrarily, then again the fight will lie somewhere else. You have to put it into black and white, then you can think of going whether this order which is passed by him based on the board instruction, he is writing to the party why Section 79 action should not be taken against you. Party is giving the reply. then for whatever it measures, you never know again what High Court can say. Kabir reality says no SOCOS notice. No harm in asking for the SOCOS notice, even for the self-assistance. You say because there is a direct conflict between 75 and 73. Second, that if the at least genuine reasons are not accepted and it is communicated in writing, just to be on the safer side, you can think of filing the appeal under section 107. Any decision or order passed under the act by the proper office, you can get into that. And in a given case, ultimately, it is a Article 226 repeats. Now, the point here is both the supplier for VBR in the context of section 16, where recipient buyer is being denied the ITC because the supplier has not paid the tax. So under GSTR 1, he has 5, but he has not paid the tax. So section 16 2C will come into play. Details are communicated to me. I have taken the credit, but department says supplier has not paid the tax. So they are moving against me. For ITC denial, they are moving against the supplier for the recovery of self-assessed tax. Now, if that self-assessed tax is recovered from the supplier, then how far the denial of ITC to me is justified? Isn't it a double recovery? To some extent, these issue has been taken care of in the revamped section 41. We will come to that. Some extent.
In the finance with
22. Yeah, it has been taken care of to some extent. Mahalakshmi Cotton, some extent. But this is something to be pondered. This is something to be kept. So in every such case where the ITC is being denied to the recipient buyer, in every such case, what is happening at the supplier's end and what the department is doing at the supplier end, you have to keep a close watch on. Don't look at the case only from the buyer's, your client's perspective. What department is doing with the supplier? Have they moved against the supplier? What action they have taken? If not taken, why? You can put everything into black and white. You can put your objection in writing. What Vice Bethel says. Vice Bethel is one of the most misread and overhyped judgments. It's a very good judgment, but completely misread by many. Vice Bethel only says that how can you go against the buyer when without moving against the supplier? And when the buyer is actually asked for the cross-examination of that. That's what Vice Bethel says. He does not lay down the rule that buyer cannot be proceeded against that rule. Nowhere it says. It on the contrary recognizes that the law provides the recovery from both the persons. There's a clear mention in Vice Bethel. So this is one part. Then the other aspect of this will be under section 16 only. The next, the new clause BA, the details of input tax credit in respect of the said supply communicated to such person, or 6 o'clock, to such registered person under section 38 has not been restricted. So first condition, receipt of tax invoice. Second condition, receipt details are furnished by the supplier and that details are communicated to the buyer. Fourth condition, supplier has paid the tax. And fifth condition, buyer has filed the return. Now sixth condition. The details which are communicated in respect of the supply, basically for the purpose of ITC, that is not restricted under section 38. If it is restricted, then even if all other credit conditions are complied with, credit will not be available or credit will be partly available. And what are those conditions? What are those circumstances? Section 38. ITC may not be made available like by new registrants for a prescribed period. If your supplier is a new supplier who has just taken the registration, there could be a possibility of central government. These are all as prescribed. Everything is as prescribed. So as prescribed by rules. Rules means section 164 and other section where on the recommendation of the council. So this is all proposed. Under these six circumstances, the central government may decide to block the credit flow from supplier to the buyer wholly or partly. And which are those new registers? They can say that this fellow has taken the new registration. This class of person or this area, whatever it be, we don't know. We have to wait for this, and the credit will not be available to the buyer. In spite of everything is fine, but no. This can be for 2 months. This can be for 3 months. Perpetually, the reason could be that yes, people are actually opening the shop, doing the business for 2-3 months, and then vanishing. This has been happening in bedrooms. Those who are not trying to become Adani or Ambani overnight, he said, मैं एक इन्वेस्ट करके मैं 5-25 लाख बना दिया, बाद में मैं शॉप बंद कर देता. And then how much might be happening, it's only the matter of imagination. So those who are caught are probably trying to be greedy. That's why they are caught. But छोटे-मोटे जो surface पे आते ही नहीं, are not visible. So this is 1. 2. Rajesh, supplier has defaulted in payment of tax, and such default has continued for the prescribed period. Here also the flow of the credit can be restricted by the government. 3rd, output tax paid by the supplier for the prescribed period exceeds the output tax paid by him during the same period by the prescribed limit. Whatever he is payable is suppose 100 rupees, is 10%, suppose, and he has actually the difference is 20%, the central government can restrict the credit flow even under such circumstances. 4, supplier is availed ITC in excess of ITC that can be availed by him by a prescribed limit. He has taken a wrong credit, right, by a particular percentage. And if it exceeds, again, the buyer can be denied the credit. 5th, the supplier is defaulted in discharging the liability as per subsection 12 of section 49, subject to such condition and withdrawal. Again, this 4912 is being inserted. Now, what is 4912?
Certain percentage of income.
Right. No, on the recommendation of the council, which may be discharged through the electronic cash ledger. So it has been prescribed that only this much credit can be utilized for the payment of outward tax. Rest you have to pay compulsorily in cash. Now, your supplier, if suppose is not, then you cannot be, buyer cannot be allowed the credit.
How are they going to identify this and implement this measure?
The fund, their fund will start. That's why I said you have not seen anything in GST.
So for 1% excess credit that you can utilize, just with this
No.
agreement, 100% just buyers के जो
That entire nothing will be available, only or partly, whatever they decide. Yes. And in cases of such other person as maybe to start tomorrow, they can. This is another condition. Now the next one is about this is as far as the clause BA which is proposed to be inserted. Then we come to that 4912. I will not deal with that use. 4912, when we look about it, two propositions can be looked into it. The one is, it is a restriction on the use of the beyond a limit you cannot, you have to pay compulsorily cash. 86B has already been inserted in the law. Capital B, 1%. Nobody bothers about that 1%. I am 100% sure. It has already started. It has already started. The audit and everything. They are not finding. They have actually exhausted all areas of dispute. So now they are getting into this 1%. Be prepared for that also. So now we come to, if you see that, sorry, 4912. The very fact that 4912 has now been proposed to be inserted, or it means 86B is illegal. Like 36.4, 86B was also an orphan, was also completely illegitimate with no. The parents are found now. The same thing is with 86A. I come to that also, which has been inserted in such pleasant manner only in this manner. So then we come to 16A. So overall, the scenario which emerges now in the context of ITC is your entire fate of ITC depends upon what your supplier does or does not do. Right? One, even if the both of you are compliant or there is anything, the central government can still restrict your flow of the credit, even if everything is fine. So availment, you avail the credit what I tell you. When you avail the credit when I tell you, when also, how much also. If you think now the credit is come to me in my account is my money, no, it's your money, but I'll tell you how much to spend. You cannot spend it beyond the limit. So transfer, use, availment, everything is being controlled. Everything is. Something we have to be very careful because here lies the grassroots level issues with our clients. They have to be made aware of this as and when, you have to identify before this becomes enacted. One is to identify in the context of all this provision where the actual practical issues can arise. And clients can be actually advised about them. And safeguard measures can be taken, system can be put whereby they do not come into the trap of this.
Sir, in the context of ITC, sir, in the Finance Bill 2022, they have amended the section 41 of CGST Act.
Yes.
They have replaced.
That was the last thing I was coming to in the context of that. 41 says that finally, that whatever, I will not go to this time because now the time is running out. It says that if the supplier has not paid the tax, the buyer is to reverse the credit. And if later on supplier pays the tax, buyer will be entitled to the recredit. Initially, the reversal is with interest.
Right.
However, after only recredits, interest is your cost, right? This is what says. This is to some extent assurance given by my part 7 which I wrote, which came yesterday in Tax India Online. My series which is going on supplier sins and recipient repents. I will discuss Mahalakshmi Cotton, Bombay High Court, which is at the roots according to me in this section 16(2)(c). The roots lie there. The judgment which went in favor of the revenue in Maharashtra state, in the context of VAT. But there, in a very, very unique case of its kind, state government had furnished the affidavit before the Bombay High Court, giving lot of assurances that before moving and while moving against the buyer and denying him the set-off of the VAT because of the supplier's fault or fraud, what action they will take against the suppliers. And Justice Chandrachud had written the judgment. Last paragraph he said that also, we also expect the government to abide by these issues. Substance of that judgment, section 54, subsection 5 of the Maharashtra VAT Act goes under challenge. Substance of this has been taken, but assurance has been forgotten. क्या हुआ तेरा वादा वो कसम कोई था. So we are going to get it. Now the question here is, if the supplier has not paid the tax, is the buyer compulsorily required to reverse the credit without even so-called notice under section 73? In my opinion, answer is no. In all such cases, if my credit availment is becoming wrong, section 73 will come into play. If not 74, 73 will come. Because it's a wrongly availed credit, isn't it? I may have utilized it also. The second question which would arise is, if that wrongly availed credit, it has become wrong because my supplier has not paid the tax. If it has become the wrong credit, but if I can prove that it has not, I have not utilized, then in terms of the substituted subsection 3, as per this budget, am I supposed to pay the interest? Supplier has not paid the tax. Section 41 says, after this amendment, wants to say that you pay, reverse it with interest. I say, okay, fine, it's a wrongly availed credit. Okay, I reverse it, but I have not utilized it.
No interest.
No interest. Why 53 should not apply?
Yes.
There is no mention of it. 41 is. So there is again classic conflict between two provisions of the parent act. Generally, we come into the conflict between the provisions of the act and the rules.
Correct.
In GST, we are coming with the provisions of the two provisions of the act. So it cannot be. According to me, 53 applies. revamp subsection 3 will apply. Then, so point is, after saying all this, the sum and substance of the whole can be summarized. Whatever my supplier might have done, whatever, can the buyer be denied the credit? Whether fault or fraud. If from the buyer's perspective, the transaction is genuine.
Sir, in section 41 of CGST Act, one another amendment is proposed. Earlier, the word was provisional there. Now they
No,
have
that provisional, I did not go into that. Provisional has been done away with completely now.
self-assessment. Just my question is, what would be the impact in the context of the government, in the context of the RTP? They have replaced the word provisional to self-assessed tax.
You are now entitled for the full credit,
Right.
right? It will not be provisional.
Yes,
Yeah, but its recovery and other
yes.
will be now mandated by, will be controlled by all these provisions. There is nothing like provisional. For the reason is 41, 42, 43A are going. The provisional was only on account of the making provisions.
Earlier.
Earlier.
Yes,
What was proposed? 43A never took off.
yes.
I will not touch with that. They are all contained in my slide. Two-way communication was expected. Right. So that highway was abandoned. Highway was never constructed. It is now one-way street
Yes, yes,
with no entry or no exit.
yes.
So I come at 2 went, 3 went. Details are communicated to me, what ITC will be available to me. I look at it, then I communicate, okay, here is the mistake, I rectify that. So that two-way communication never took off, it was a mission aborted.
That section was
Right,
redundant from
right,
very beginning.
Right. So therefore, now provisional attachment has lost its totally, utility. That concept has no meaning. The concept was in the context of the making only. The provisions of making have gone over. They have gone much more ahead of it. It's not question of now making only. It was earlier it was supposed to be mission match and case.
Right, right.
Now it is mission case only. So therefore, no provisional assessment. Totally provisional credit. So the question here is therefore now. So now we look at it. Ultimately, whatever is being done, how far it is justified from the principles of law, legal position perspective. At the end of the day, what boils down is, can the ITC be denied to the buyer recipient for the fault or fraud of the supplier if the buyer's complicity when the supplier's fault or fraud is not established? This is House, Palkram, the Granada, these are all cases because GST is a very fraud-prone case. VAT is very fraud-prone case. Such frauds are happening all over the world. It's not only India. We are more ingenuine. Our ingenuity is much more than others. That's a different. And invoice payments are largely selling commodity in this country. So such thing happens. But the question here is that what European Court of Justice has laid down is very clear, that unless and until the complicity or the involvement of the buyer in the fraud or committed by the supplier is not established, buyer cannot be denied the benefit of the ITC. What we call ITC, they call it VAT reduction. This has been echoed by the Punjab and Haryana High Court in a very sterling judgment in Gerulal Walcha, though it has been distinguished in the Mahalakshmi Court entity. But for a different reason, Then again, very recent judgment, and then we will sum up this topic, is that Rajasthan High Court judgment in Acae Oil Traders, 4th February judgment, where they have dismissed the review petition of the government, whereby the government has sought the review of the High Court decision where the demand against the buyer under the VAT Act had been quashed because the supplier had not paid the tax. And in that judgment, High Court had referred to another judgment of RS Infra of the same High Court, Arise India Delhi High Court, and another judgment of High Court in Trilok and Palak case. All these judgments have been referred to by the High Court in a detailed order while dismissing the review petition, and they say we see no reason to interfere with our order. It was a classic case of supplier having run away and the buyer having denied the benefit of the ITC. Say no. Principle applies according to me. So either a transaction, that's why I said either a transaction is genuine from the buyer perspective or the transaction is not genuine from the buyer perspective. All these artificial roadblocks which have been created, their validity is susceptible to very, very serious challenge.
So you think this will be challenged?
This will be, and this has to be challenged.
Because all
You see,
52
the point is where, as I've been saying time and again, that we are still not coming out. There may be justification for all this. But what I'm really now wondering is the way the quantum of fake credit, which is being unearthed every day and every hour, now it may become every minute. Suppose it's a running hour, ball-to-ball commentary, like that, of a running match. So they might as well do away with publishing these figures. What they should do is publishing the figures of the genuine credit. In the country, this much genuine credit is actually floating around. Rest is all fake. That is much more easier. It's a question of trust. We professionals have a lot to really ponder over this. I have been talking and discussing on this, but it's a something different topic altogether. We need a session on that. Okay, what professionals have to do in this matter, not only from the law point of view, but overall perspective. There's a lot to do. Otherwise, we are heading for the disaster. And if this is the statement of objects and reason, 101st Constitution Bill, setting down the constitutional framework for the GST laws, clearly says GST is expected to be it is intended to be one nation, one tax, common national market, intended to avoid the cascading effect of tax on tax by giving the credit. They have not used the word seamless credit. Okay. This became on 1st August 2008, September 2016. The bill was passed. But you look at the FAQ on the GST simultaneously released in December 2016 by the board. First two questions, question 1 and question 2. They say seamless credit. They expand seamless. It is not seamless, as we know that. It is a seemingly less. And becoming now more and more difficult. Genuine taxpayers may actually cry and remember Raj Kapoor and Mukesh and say that मुझे तुमसे कुछ भी ना चाहिए, मुझे मेरे हाल पे छोड़ो. So yes, so we have challenges, but all these aspects will have to be tested in the light of the principles of which have been laid down. There are Tarapur and Company, Modi Oil Industries, Gujarat High Court, Gerulal Balchand, R.S. Infra, Arise India. Bharti Airtel is only touching on the issue of bitter dictum, according to me, in the context of 2A. YS Bethel, Mahalakshmi Court, though it went up in favor of them, and there are host of judges which may be gone into principle has to be established on this.
Sir, yeah. One thing, in 43A, they have omitted in the finance bill 2020, they proposed to be omitted, right? And 43A bracket 4 talks about the 36.4. So once the government intention has done away 43A, what is the fate of 36.4, sir? I mean,
no, because 43A was a separate mechanism for making.
43A bracket 4 talks about 36.4.
No, so now 36.4 simply talks about as an independent rule substituted to be substituted sub rule 4 now is in line with clause AA of section 16.2.
Yes, exactly. 16 section 16 itself.
Because 43A never took off. 43 was never actually it was never implemented.
Yes, 43.
It only became the part of the enactment on 29th March 2021.
Yes.
When the Finance Bill 2021 was passed on 29th March 2021. On that day, it became the part of the enactment with A. So it remained a date letter. It was never brought to the life, and now they omitted it.
Then we can say the child has got parent on 1st January 2022 only for the 36.4.
Yes, so remember the prior to 31st December 2021, what we have been toiling day and night in the context of 2A and verse 30B was entirely uncalled for.
Yes.
Totally unwarranted. Then 83. Again, this is another section. Legally, you have to keep it in mind. This particular section. They have now taken the powers of initiating the attachment related powers, even if any action is initiated under any of these provisions. Like say section 70. Summons is issued and the attachment of the bank account or property can be done by the commissioner under section 80. Earlier it was section 61, 62, 67, 73 and 74. 6 sections were there. Now it is being proposed to be amended. Earlier only these sections were there. 62 and ASMT, scrutiny of return.
83(1), sir, what is the difference between pendency of any proceeding or initiation of any proceeding?
So it was a pendency. The proceedings have been initiated, proceedings are pending at that time. This is the current section.
So can you give an example?
No, suppose ASMT 10 has been issued.
ASMT 10 is issued,
So
right?
these are under section 62,
Right,
right? Or section 73, show cause notice has been issued.
right.
Now, when that is done for the purpose of, now that is pending before, so cause notice is under reply.
Right, pending for any proceeding, yes.
Right? And it can be not only reply, even the order is passed, proceeding continue right up to it is terminated into the proper regime. During that period, when on one side the battle is going on in terms of these provisions, on the so cause notice or on ASMT 10, if the commissioner feels that there could be tampering with the property and party will run away, he can order the settlement. Now, these were the only 6 sections under which is the pendency of the proceeding. Now they say, after the initiation of the proceeding,
Yes.
right, under this chapter, initiation, the moment, the literary meaning of initiation is to start with.
It meaning thereby suppose something.
Section 70 summons is issued. I am giving you state example of 70.
Okay.
Summons is issued. Here summons is issued. There the bank account is set. It should not be. It can't be. But these are the powers they have taken because they were completely annoyed with the Valerius judgment, Gujarat High Court, and Radhakrishna Industries Supreme Court judgment. They did not like Acae engineering, also Gujarat High Court. So it's like a bureaucratic vengeance. You know, Bruce Willis, third part, die hard with vengeance. This is strike hard with vengeance. Seriously, I hope we will all on all this we'll have to wait for the SOP or guide for whatever it's worth. This is another battle brewing for all of you. Imagine on one side your client has been issued with the summons. On another side, he also come immediately running. Sir, my bank account be attached. Okay.
If the summon is issued, suppose for the fake bills, right, to RTP, can we attend as a chartered accountant is authorized representative to the?
Would you like to?
Yes, I wanted to know, sir.
Unless you are, too much privy to his affairs. Not advisable.
Okay.
They will not
advisable, right?
Not advisable. No. At least in last 35 years, I have never attended any.
That is my yes.
I monitor the investigation on a minute-to-minute basis.
Okay.
I never appear. I never even demand my appearance as an advocate.
Right.
One reason is it's a transaction-based tax. The transaction on which investigating agencies are concentrating, I don't know in what manner those transactions have been carried out by my client.
Correct.
I don't know, right? And if there is something which is embarrassing, it will create a very, very frequent situation for BS professors.
Right.
Instead of that, remain behind the curtain. This is not like the direct race. Suddenly, Acae or chartered accountant Haji. You have to come out of that mentality.
एक वन क्वेश्चन, कहीं इन्वेस्टिगेशन होता है क्लाइंट के, हम लोग के पास फोन आ गया कि मेरे यहाँ ऑफिसर आए हुए आदमी लोग आ गए हैं, सो कैन वी गो देयर एक्चुअली, बट आई मीन सपोज कि मेरा काम यही देखते हैं, राइट? जनरली दे से एक्चुअली कि अनुप लोहार का ही देखते हैं
ना दे से क्लाइंट के पास मेरी नींदों में तुम मेरे ख्वाबों में चार्टर्ड अकाउंटेंट
यस सो दे जनरली सेड कि हां मेरा अनुप लोहार का दे कॉल अप कि आप आज
उनका डाइवोर्स का भी केस होता है तो पहले तो चार्टर्ड अकाउंटेंट को याद करेंगे एंड ही विल नेवर से
तो कैन वी गो देयर सर इफ इट just I wanted to know, sir.
No, they can, but you see, the question here is all again depends upon your relationship. What happens if the officers say can in place? आप जरा बाहर जाइए.
Right.
आप यहाँ पे हाजिर नहीं रह सकते.
Correct, sir. Correct.
For advocate's presence, when I took up this entire summons investigation, so last 6 महीने में मैंने 6-7 लिख के खाली सोको सोटी summons पे दिए जो मैं audit में, only on that practical part and legal part. I have said this. Okay, for advocates to be present also, High Court's intervention had to be called.
Okay, sir. Okay, sir. Sir, in one of the order, what department has done, suppose in a particular RTP, the CA was looking the affairs, my GST was. In the order itself, they have mentioned CA name, they have given the name. He is advising in the consultancy work with, they can do it, sir.
Yeah, but what ultimately what they have written?
They have written CA name they have given.
Okay. So what? Further what?
Further, they are looking GST, they are making the compliances, so they have not written harsh anything about the chartered accountant.
Nobody says they are taking the help of the CA in spite of that they have committed.
They mention the name also, sir.
That's okay. If it does not harm you, that's fine.
Right.
But we have to be careful. Things are little bit unnecessarily and should be avoided. You monitor it really from outside. Then the things go out of and then think of going to high court.
Right.
But your presence was very advisable.
Okay.
Unless you have a very cozy and cordial relationship, which many have, sir, officers,
Right.
or individual. Then last 83 hours, again, this is we can hope that there will be a proper SOP. We will have to take this seriously. This 83 hours is dangerous. If SOP guideline we will have to give. I mean, IUB has SOP guideline. It has already come. How far that will be implemented, that is to be seen. Then this detention of goods and remedy. I directly come to issues. I will, because of continuous detention case I deal with them, e-way mail and all that, right? I'll just come to the issues immediately. These are all massive amendments, large, wide-ranging amendments which have been carried out. As per the existing procedure, first of all, if there is a conclusion of the proceedings under section 73 or 74, then there will be penal proceeding also against the co-notice will be also. In the confiscation case or some suppression of production and plantation and removal case, the demand can be against the main noticee and against the co-noticee. Suppose transporter, partner, or other buyer, somebody. This is common in excise. We have been seeing this. Now, if the main noticee proceedings were concluded because he has gone for the closure of the proceeding under 73(9) or 74(9), up till now the provisions were there that the main against the co-notice also it will be deemed to be concluded. Now they are actually segregating this confiscation related action from 73-74, that action will continue. That action will again continue. Then so that penalty can be levied also under that 129-130. If now the closure of proceeding for everybody, it will not be. Then release of the provisionally before amendment, where the owner of the goods come forward for the release of the goods. Pehle it was 100% tax payable, which is to be paid. Before amendment, where the owner of the goods come forward for the release of the goods, he used to pay 100% tax payable. Now, he is not required to pay 100% tax, but he has to pay 200% penalty. What type of relief is this? It was earlier 100% tax and penalty. Now it is 200% penalty, and they call it relief. It was openly declared as a relief when this was mooted. 200% penalty. Then, in case of the exempted goods, it is 2% of the value of the goods. There is no change. Where the owner of the goods does not come forward for the release of the goods, this is for the transporters. The question arises here is whether now don't bring it. The question here is, if there is a detention of the goods for any reason, which is subsequent detention, seize and confiscation are 3 stages. By and large, principally detention और seizure के बीच में कोई फर्क नहीं. But seizure के बाद confiscation हो रहा है, तो whether for the release of the goods can I be forced to pay the tax? It's a legal issue. Can I be forced to pay the tax? Particularly if the goods are moved already under e-way. Tax invoice भी है. Tax invoice मेरा GST1 में declare हो गया है. I will be declaring on the GST1. So at the end of the month, I will be required to pay the tax in any case on that. How can the tax be demanded on the goods which are seized in the transit? Unless it is moved without invoice. Then also it cannot be. It can be only seized and then confiscated. How can the tax be demanded? How can the penalty be made a precondition? One. Secondly, all such order, such detention seizure, which is saying that the time limit is 3 months for filing. These are available order under section 107. Now, what do they say about, first of all, provisional release? Concept of provisional release has been in vogue in customs also and in excise also for years and decades. Now, provisional release concept has been now taken away. It has been done away with in the name of facilitating. Nothing provisional, pay 200%. Then the next is the proper officer, he should issue the notice. An order shall be passed within 7 days. All this time limit is fine, right? But when he passes the order, requiring the transporter or owner to make the payment of penalty on the seized goods in respect of the seized goods. Isn't it an appellable order under section 107? For which the time limit is what? 3 months. If the time limit for filing the appeal is 3 months, how can they dispose of the goods for non-payment of the penalty within 15 days of the order?
One can also file the appeal within 3 months.
Yes. How can that be if the time without there being the expiry of the time limit? How can the seized goods can be failure of the transporter to pay the penalty within 15 days of the receipt of the order? The detained or seized goods or conveyance liable to be sold or disposed of. On what authority? My section 107 says any decision or order passed by an adjudicating authority. He is acting as an adjudicating authority here. Because adjudicating authority means any officer. Adjudicating authority does not mean when there is a so cause notice. And here there is a notice also. So he has all the attributes of adjudicating authority. Absolutely illegal provision. Then implications of 130. No additional liability towards. Is the issue of notice an empty formality? Substituted provision, you see, it is as if everything is foregone. Conclusion. Just to make, for the sake of some, keeping everybody in a good mood. Okay, now we will issue the notice also. Otherwise, it does not make any sense. Does the proper officer once the notice is issued, reading of this section says he has no discretion or authority. He will continue with the seizure and confiscation. He has not been vested with any discretion or seizure at all. He has to simply complete the formality. Even if he is satisfied with the explanation, his goods should not have been detained. Is the penalty, there cannot be double penalty. 129 and 122 are not separate penalties. Similarly, 73 and 122 is not a separate penalty. 122.1 is mostly penalty, as I said it, some 21-22 situation, it's a mandatory penalty, 100% in evasion cases or offense cases, which is more in the context of 74. And 122.2, 10% is the penalty in the context of section 73 cases. But there can't be separate penalty under 73 or 74 and 122.1 and 122.2. Similarly, 129 and 122, there can't be double penalty in respect of such detention or seizure of goods. The order passed under 129.3, if the release is to be secured on mandatory penalty, now if I have to pay 100% mandatory penalty or 200% penalty, and if that order is now made available, right, then what is the significance of this 25% penalty for filing the appeal? How can there be any more, glaring example of such an arbitrary and thoughtless provision? On one side, you are amending section 107, pre-deposit, 107 subsection 6. You are amending that, saying 25% penalty to be pre-deposited in 129, 130 cases. On other side, you say, no, come here and pay 200% penalty or 100% penalty. So on one side, you are also recognizing that this is an appealable order. Still, you are curtailing the time limit and forcing me to make the payment. And as if making mockery of the justice or making fun with me, you say to you pay first 100% penalty or 200% penalty, but at the time of appeal, you are required to pay only 25% penalty. What type of law is this? These are all to be challenged. These are all high court matters, unfortunately. Then, coming to the current year amendment, only 2 amendments I will look into it and then we will close this. 10-15 minutes. Section 34, due date for credit not extended. Wherever the due date is prescribed, like the filing date for the month of September of the next financial year, or the due date for furnishing the annual return, September has been made 30th November. Wherever it is prescribed, section 16.4 and annual return. I only see, okay, what is the significance of 30th November? By extending it by one month and 10 days, what great, relief has been given. And most of tax audit, your normal time limit is September, tax audit report, and then October, 31st October. If my entire accounts are closed and crystallized and finalized and filed, everything is done. If in the month of November, if I find something, I missed out on this credit, suppose, then what am I going to do with that? When I have closed my entire everything. It's a high time. This is one agenda for the future. Okay, there needs to be some synchronization of various due dates under various enactments to the extent possible. Everything may not be possible, but on an important aspect, this synchronization is the need of the hour. Otherwise, we will continue to issue the alert on the first, the due date of compliance for the month of February, due date for compliance for the month of March. This is a pitiable situation to be in. You have to issue an alert for listing out some 10-15 dates. In the month of March, you have to comply with this. These are the due dates under various enactments. Then, due date for credit note is also extended under 34. Furnishing of details. Okay, this is a 41, 42 omitted, 43A, 37 is also. These are all amendments on the way of doing away with the matching concept. Furnishing of returns. Another important change which is there is that if a return for GSTR1 is not filed for the previous period, it cannot be filed for the subsequent period. One change. And if GSTR1 is not filed for a month, then 3B for that month cannot be filed. Now you understand the ramifications of this. If I do not file the, suppose for February, I do not file the GSTR1, then I cannot file it for March. I cannot file it for March. Right? Now, if I cannot file for March, it means my entire as a supplier, my tax liability and everything is in a limbo. So the invoices which are issued for the genuine supplies, my buyer cannot take the credit. This entire provision is based on the assumption that those who are actually playing with the system or fraudsters, they will be hit by this. It appears to be their only assumption. But in a genuine case, if there is any lapse on part of the supplier, there can be a huge impact. So again, from the compliance perspective, all these aspects will have to be taken care of. They might be targeting the fraudsters, those who are running away by filing GSTR1 but not filing 3B or not filing GSTR1 at all. They might be targeting them. But in a genuine case, even the bona fide buyers will also suffer. Then claim of input tax, this is gone. This is 49.4. There are 4 amendments into this. 86B we already did it. I was talking about 86A, and that is providing for the restriction of using the credit. That is 1%. That was 86A. And 86B was restriction on use of amount available in electronic credit. Rule 86A, to condition of use of amount. The proposed amendment says the transfer of the amount available from electronic credit ledger to electronic credit. What the 49.12 4 says? The amount available in the electronic credit ledger may be used for making any payment towards tax under this act in such manner and such subject to such condition as may be prescribed. This is 4. And now what 10 is proposed to be said? Proposed to say? May on the common portal available in the electronic credit ledger. So both the 86A and 86B have been introduced in the statute, even without having enabling statutory provisions in the Act. And these amendments now clearly prove that 86A and 86B were illegal piece of invalid piece of legislation. Then 50, interest on delayed payment. In my article on the budget, which I wrote on Tax India Online on 2nd February, I have explained in detail this provision. I will only summarize I'll only say that what they propose to do, section 50 subsection 3 as of now says any interest will be leviable in case of any excess or undue amount of credit in terms of section 4210 or undue reduction in the output tax liability in terms of section 4310. 42, 43, they are being done away with. Now the question here is, multiple questions arise in the context of this law, that if there is a wrong availment of credit on account of interpretation, section 17.5, right, block credit, but I have bona fide taken the credit by interpreting the provision excluded category, can the interest be recovered in terms of the existing subsection? Existing section 53, can it be? In my opinion, no. I would go to the extent of saying that even in case of fake credit, where the system is showing everything, there is no supply, but supplier has paid the tax. Tax invoice has been issued. I have taken the credit of that. You are actually moving against me for what? For non-receipt of the supply. Which clause will be applicable? Section 16(2)(b). Because everything else is fine. All conditions have been complied with. But 16(2)(b) is not complied with because there is no physical supply of the goods. Correct? Fine, you recover from me. Can it be said an excess or undue credit in terms of section 4210 or 4310? Existing section. Because everything is matching. Where he is showing, he has paid the tax. You may recover. How can there be an interest liability? So I have taken the position that unless, except in case of any wrong credit, excess or undue credit arising, or excess or undue reduction in tax liability arising on account of 4210 or 4310, in all other cases of input tax credit wrongly availed or utilized, the interest liability will not come. It's a debatable but disputable, but worth fighting. It's a pure bad term. I had pointed out this in my interaction with them. Okay, this is very badly drafted. You are only concentrating to get away with on undue. But undue or excess has to be read together in the qualified by the remark in terms of 4210 or 43. So it should be undue or excess in terms of that. Undue is not a separate word here. Adjective is not separate. Okay, undue means for any other reason, but excess in terms of 4210. Unless this dispute arises and some court comes to the rescue, there is a challenge on this. But today it is possible, unfortunately, to take this position. The interest liability will arise under 53 only in this, if there is a mismatch in the context of 4210 or 4310. Now they say that entire question, because mismatch concept has been done away with, and as the 45th Council meeting has given the promise, no interest liability of the wrongly covered credit is not. Now wrongly credit covered, now it is for any reason. Now it is for any reason. So they are not using the word, but it is wide enough to cover it. So no interest liability will is not utilized. This is retrospective amendment. So suppose that this bill is enacted on 1st March, let us assume. So this will become part of the law, but still dead letter. Then on 1st January 23, suppose it is notified. So on that day, this law will become effective for future, and it will also become effective from 1st July 7th. Because it is retrospective. Under these circumstances, and interest rate is also 18%, which is also retrospective. So two major call out of this, those who have paid away the wrong ITC wrongly, but not utilized it, but paid 24% interest, they can ask for the complete refund. And those who have paid the away wrongly, ITC wrongly, and utilized but paid 24%, they can ask for 6% difference reversals. There is no bar created, unlike other provisions. I was reluctant to write this article. Budget में amendment move कर देंगे, blocking the refund. And last is refund of tax. There are two important amendments which you have to keep it in mind. Section 54(3), which says, 54(10), that if any refund, existing section, where any refund is due under subsection 3, then that refund, unless it's who has defaulted in furnishing any return or who is required to pay any tax, interest or penalty which has not been stayed by any court, tribunal or appellate authority, then the proper officer can withhold the payment of refund, and he can even deduct from the refund such tax or interest or penalty payable. On one side, he has filed the refund claim. On other side, there is a tax, interest or penalty due from him, the recovery of which is not stayed by the court or any other authority. So he can adjust this. This is the sum and substance. But these refund claims should have been under subsection 3, that is inverted tax structure, or another is under bond. Right. Only 54.3 is only unutilized credit refund.
Right.
Now they have expanded the scope so as to cover all type of refund claims filed under section 50. So refund claim filed for any reason, mistake, tax paid under mistake of law, and I filed the refund claim within 2 years. Section 54(1), main section, right? This refund adjustment can be done.
Right.
This is the impact of this. Now the question here is, can they do this suo motu? Adjustment can be done. What is meant by required to pay? At what stage the tax, interest or penalty become payable by, can be said to be payable by? Because they are saying that if it is not stayed by any court, question of staying the recovery by the court will normally arise when the order confirming the demand is passed.
Yes. Yeah.
So at the so cause notice stage, can that person adjust my refund?
No.
Answer is no. Keep it in mind because these issues are going to arise. When we approach the High Court for stay against the recovery at the so cause notice stage, suppose they say that give an alternative remedy. Why are you rushing to the High Court? The words will not stayed by the court, appellate authority or tribunal are giving away. It can be only in case of confirmed demand. This is very important because I am expecting a lot of arbitrary action on this point. Otherwise, the scope has been widened. And the last point is about in this SEZ, after 4.5 years, they suddenly realized that we have not specified any specific time limit for the filing of the refund claim in respect of the refund of the unutilized credit for the supplies to SEZ. So now they have specified the time limit, that it will be, the time limit will be due date for furnishing the return after 39, that is 3 weeks. For 4.5 years, they did not realize that there is no time limit for filing the refund. As per the existing law, for unutilized credit in respect of the supplies to SEZ, this is a zero rated supply under section 16 of IGST. Suppose some refund has arisen for 17-18, as per the existing law, refund can be filed now. The 2 years time limit is prescribed only after this budget. And the power to issue. I think friends, this more or less sums up the entire. These are all overall. This is an ongoing exercise. I can only say that today I might have touched upon even only the surface of it. But giving you an idea, and that's why I started with this is a very serious budget I have come across. The whole concept of whatever justifiable, unjustifiable reason, the entire concept of ITC is now going for a toss.
And the finance minister has not mentioned anything about
The art of presenting the budget is more about not revealing something than revealing something.
that we have very much observed in this budget.
Everything. So that is, but we have to get into this. Thanks for the presentation.
I think we all have been a witness to a very historic lecture meeting today, wherein sir has taken the pain of preparing such a detailed presentation, and also he has discussed so many points, clause by clause, like he had told us that he will discuss so many aspects. I think we all have been really benefited by the interpretation sir has given in this lecture, and it is a food for thought that we all should carry this entire discussion that we have been witness to home, discuss with our fellow professionals, with our partners, with our people at the office, and discuss all these things. That what is the impact of the budget? So many clauses, on the business operations of our clients, and also from ACA, we are, and from the institute also, we are preparing a post-budget memorandum. So if there is any point that you all want us to place it in the memorandum, please tell us so that we can include those points in the memorandum and place it before the government of India so that they can take a considered view on these proposed amendments. With these few words, sir, I thank you from the bottom of my heart on behalf of the association and on behalf of the study circle that we have taken out time from such a busy schedule, because I have been interacting with sir very closely, and whenever I request sir, please come on our platform and spare some time. So sir always says, yes, I'm busy, but okay, for ACA I can take out time. And today, sir, you have showed that for your love for ACA, that in such a busy schedule you have taken out time and agreed to share your thoughts with us. And also, thanks to our past president Arunji for arranging the session today and inviting sir on our platform. With these few words, I will now request our past president Arunji to please give a small token of love and appreciation to our learned speaker of the day today, Advocate Sally Singh.
It's always a pleasure and honor.
Pleasure is mine. Thank you very much.
With these words, please carry the vote of thanks to a big round of applause.
Thank you, sir.
हाँ चलिए सर
Small text के पास कोई option
so much vigilance. Supplier के politics क्या करेगा? Pretty small in the sense 20 crores. I know that. उनको भी करेगा. So okay, parking. আর ব্যাগ আর এটা ডাক্তার নিয়ে উপরে যাচ্ছে সব বন্ধ করে দিই দুধ ভেঙে দেবে পড়ে গেলে কি করবো তো আমি এটা বন্ধ করবো এগুলো সব থাক যে কালকে লাগে না বাবু ও তুমি দিস ও বসেছে আমি চললাম বসেছে আমি কি করবো আমি এইগুলো তো গুছিয়ে দিচ্ছি হ্যাঁ কি বলছো আমার কত জানি না বাবা তাই বাবা আমি চলে যাবো যাও তোমাকে বিকেলবেলা কতবার ফোন করছিলাম বিকেলে কতবার বিকেল 8টা থেকে হ্যাঁ ঠিক আছে এর 500 টাকা দিবি তো যে 500 টাকা দিবি কে না দিব ও তো ইয়ে কই আমি করব না কিসে 500 টাকা বলছিস ধার হ্যাঁ ধার এখন আমরা যদি পাই পেয়ে যাই সেটা করে কিছু করব আজই নিজে টাকা করতে গেলে কত দিন লাগে আছে আরে হ্যাঁ এই টাকা পাই তো বলে টাকা পাই মানে পরে ফোন করব হ্যাঁ এই যেটা বন্ধ করবে যেটা বন্ধ করবে আপনি বন্ধ আর কোন সব বন্ধ হয়ে যাবে নেট না ও বাবা ও খাচ্ছে তো লোক করে এইটা বন্ধ করে দিল ও কালকে ए वो लैपटॉप फोनটা ওই তো ওই কি ভিডিও টিভির মাধ্যমে কাটলা ওই তো এইটা Hello. Budgetary.